In this video, I'm going to be discussing a Chinese company that you might have heard of, Alibaba. What's the long-term projections? What are the short-term projections? And can you really trust this Chinese company? Well, I'm going to talk about it in this video and give you a really good trade setup that I'm quite confident is going to perform very well. Let's get in right now. All right, ladies and gentlemen, so here's the skinny. You're going to be quite hard-pressed to find a company that is more financially robust than Alibaba. Check this out for just a second. If we go to finviz.com and if we're looking at this Alibaba stock and we're really doing the analysis on this particular company, really to find out if this is a good stock to buy. Check this out, market cap. Now, it's so amazing. I mean, if we go back to a monthly chart, just so you can really see the scope of this. Alibaba has been on the markets since 2014, okay? Not that long ago. Their market cap is $700 billion. Yeah, billion with an L. Listen to this, income, 20 billion, sales, $89 billion. And they're growing. Sales quarter to quarter are growing at a 30% clip, quarter to quarter. That is magnificent numbers, absolutely sensational. And then gross margins are 43%. Now, again, a lot of people are going to be calling Alibaba, well, the Amazon of China. And you're not really going to be far off if you're saying that, because this e-commerce giant, right, Alibaba, is just a behemoth. There are a lot of companies in China that are a little bit of speculative plays, without question. And a lot of people are quite scared about the fundamentals and can they trust the fundamentals. But on Alibaba and a few others actually, Alibaba, JD.com. Hi, my name's JD with JD.com. So JD.com is the third largest e-commerce retailer in the world. I mean, just another massive company that's gone from, by the way, $20 to $82 in the last 2 years. But I would say JD.com, Tencent, TCEHY, and Alibaba are the three largest and most profitable Chinese companies if you're looking at investing in some Chinese companies to get that additional exposure. So what we're doing right now, looking at the Alibaba on a monthly chart, we're going to notice some really clean support resistance levels. So this is an old resistance here at about $200 a share. And this is the most recent month back in November. It's really not surprising to see a pretty decent sell-off here. Notice you had 1, 2, 3, 4, 5, 6, 7 bullish months in a row, and then a big down month. This is just pure profit taking, pure selling, some monthly cash flow being locked in by investors who were buying down here in the 200s. And when it went up to 300, right, nice round even number, they started selling to lock in profits. And that's really what we're experiencing right now in Alibaba. Now, another really intriguing point, this is a hammer on a weekly chart. And if I turn on the 50 EMA and the 20 EMA, you'll notice the overall moving averages were in a general bullish trend. So the 50 EMA and the 105, which is the purple line, holding the price action pretty nicely on Alibaba. And this is an inside candle. So you have a small little hammer, inside candle on Alibaba. So if we're looking at this particular stock and we're asking ourselves, should we be buying it? I think the answer is pretty clear. The answer is, yeah. You have an inside candle, compression, really nice compression. And this right here is a retest gap. My preference on Alibaba is for it to actually come down into this 230 level. This is where I'm personally looking to buy a lot of Alibaba. Now, I don't know if it's going to come down to this price or not. This is just the area of which, if it does come down to, will be a very no-brainer play in my particular opinion. So what I'm going to do is zoom out and come back to just a regular chart. And so you'll notice that would be about a 30% pullback on Alibaba if it pulls back to 230. So if it can pull back to 230, 30% pullback, that's when I would get really excited to be long Alibaba. That's where I think you could be buying this stock down here, just based on the analysis of the chart, based on the absolutely gargantuan fundamentals. And if I did that, my plan would be, if we pop down here, my goal is going to be to buy some January 2023 $300 calls. If we get down to 230, on Alibaba. Now, the thing is to keep in mind, what if we don't, right? What if we don't actually get down to that 230 level? Well, what I'll be looking for at that point is if we take out the high of this candle, so this is the weekly candle, it was an inside week. And you're gonna be hard pressed to find an inside week candle on Alibaba that did not eventually break out higher. This is a good example. So you have an inside week. The last one really that we can look at was July 27th when we had 4 weeks of compression on Alibaba. Boom, 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 very nice pennant pattern, and then bang, nice little breakout. So right here, inside candle, pressure, building, trend, bullish, nice retest gap. This would also be the previous retest of the all-time high. So if we can pull down to 230, look to get into some longer term out of the money calls, buy the dip on Alibaba and put a nice amount of time on that particular position. And then as this thing trades sideways, if we break higher in the next 2 or 3 weeks, my plan would be to buy January 2022 $300 call options. And that'll be my goal, that'll be my plan. And then if that actually does in fact happen, where we eventually break out, let's say we take out these highs, then I'll be looking to sell those $300 call options around 320, which would be probably somewhere between 30 to 40% return on that particular option, even though the actual stock trade itself would only be up at that particular point in time about 20%. The option will increase quite nicely because those calls presently are out of the money, but they have been in the money before. So that is my analysis on Alibaba. Also, really not that expensive of a stock to buy, realistically. As far as the fundamentals are concerned, I mean, if you're going to be buying shares, you could buy 100 shares. You're only looking at 26 grand. And as you own this particular company, you could sell $290 or $300 covered calls a month out for the next 5 or 6 months, and the likelihood of Alibaba being above $300 between now and 6-7 months from now is extremely high. I would say well over 90% likelihood that that's going to happen. So buy low, sell high, own this e-commerce giant that is just absolutely murdering the fundamental game, and keep in mind that its stock price is not specifically too high. I remember people saying how high Amazon was all the way back in 2012, and it was $200 a share. Right? Amazon's too high, Amazon's too high, Amazon's too high. This thing needs to go lower. And just look how beautifully it trends with the 105 and the 50 moving average. It's a really, really good area of consolidation. And I really think that this is very similar to Alibaba's price action, as it, again, had this nice little pullback, run up, nice little pullback, run up, and then again, nice little pullback into the moving averages. And that is what I'm looking forward to on Alibaba. Anyway, that is my analysis for this particular stock. I hope it was helpful and beneficial. Let's see what she does, but longer term, long and strong on this bad boy. Hopefully this was a helpful review and you absolutely rock. I'll see you later. Bye.